Hey everyone, it's Rob Golfi here with Remax, the Golfi team. I'm here with Conrad Serini with Remax Escarpment, Remax Niagara, top broker in Ontario. Brian Hogbin, top mortgage specialist, mortgage broker in Ontario, Mission 35 Mortgages. And so a couple of things that hit the news is real estate investors, cottage owners could be hit with a bigger tax bill following Ottawa's capital gains. First of all, what the heck are they doing this? Like they never pay off the deficit. It just gets bigger and bigger. Are we ever going to pay anything off in this country? Does any country ever pay anything off? Or is it just, just going to get passed down generations for the next 2,000 years? The debt just gets bigger and bigger. I don't know. What is going on? Why are they doing this? Why is this happening?
Well, I there's a lot of theories. I think, this whole budget was like a Christmas budget, right? So they gave a lot of candy and a lot of presents. So I don't know, maybe we might see some sort of non-confidence vote and an election in the fall. I don't know, but 30-year AMs for first-time buyers of new, that's another one. Are you ever going to pay your mortgage with a 30-year AM? I think everything is going towards that direction. This one here, they said it wasn't going to touch a lot of people, but yeah, there are investors. There are people that have, big, large, decent-sized stock portfolios. Doctors, there was just news about doctors selling their practices. It's going to hit people in a very interesting way. It's a lot of tax, 100%.
And I think it starts to bode that it starts to make that conversation too for even the investors to keep the property now. I've already had conversations this week to do the calculation and say, hey, why don't I just refinance? If I'm going to pay an extra, if I'm going to pay 33% instead of 25% on capital gains, and I can take out some money out of it, still be cash flow positive, why would I sell it? I can take the money out tax-free, don't have to pay any capital gain, so I'm just going to keep it and let it roll.
So what do you think bigger investors are going to do? You think they'll just say, oh, well, that's just the way it is? Or you think they're going to start taking their money out of the country, going maybe to the U.S. and buying in Florida or whatever?
That's an interesting argument. There's no question. But I still think there's enough, individuals have it's still, if it's $250,000 gain, it's still subject to the old tax.
Right.
It's the corporate guys that it's $1. It's the new 33, 66%. That's one thing to remember. And they did increase the lifetime to 1.2 million capital gains exemption. So there are some
for corporations, for corporate.
Oh, no, for individuals.
Oh, for individuals.
So,
like the one-time capital gain exemption if you sell a business, major asset.
Major asset. So you've got that, and they increase that by 200,000. Look, if you're an investor and you can plan it properly, and you want to dispose of your portfolio over time and make sure the gain is that 250,000. You got to remember too, you've got expenses, all kinds of things that you're putting in there. This tells people to keep it. A lot of people are saying, I want to put it all into a corp. Well, the corp is from $1. Individually, now the individual investors got a little bit of a benefit. They got a $250,000 benefit here that they won't be paying the new capital gains on. So there's ebbs and flows. There's positives and negatives to it. Right?
So it's better to buy properties for right now. It's better for me to put it under my personal name, these properties.
I've been telling people that for years. A lot of people think the corp's better. And I tell people, they think for insurance purposes, if you're the onesie twosie, I tell people all the time, up your liability insurance. If you're worried about it, don't get $1 million liability, get 2 million liability or 3 million liability. And you've got more financing options. If you're, unless you're going to be BlackRock or be a big, huge investor going to corp, I don't see as many advantages anymore, especially with this new rule.
Yeah, no kidding, totally. No kidding. But now, for instance, the cottage owner. Now, there's a lot of cottage owners out there now, and a lot of these cottage owners, they're getting it up there in their 70s, 80s in age. So they're going to pass down the cottage now. Their kids are probably using the cottage. It's going to get passed down. So let's say there's 2 siblings or 3. And instead of going through probate, best thing for them to do is put their names on title on joint tenancy, so they would eliminate all that tax. Am I correct on that?
That's basically correct. Yeah.
So the last survivor. So basically, they almost can go 2 or 3 generations down, doing this without any tax. I mean, the last generation is going to end up paying the tax, but I mean, but at least it keeps the building in the family. It keeps that
until you get that one family member. It's like, no, I want the money. I hate it.
Yeah. Well, the ones that want the money, okay, they're going to pay.
But we see that with like mom and dad's house as well too. You know, if mom and dad are getting older, getting sick, they put the kids on title, right?
Yeah.
It's a great way. It's a great estate planning.
Yeah.
To make sure that that asset flows through without any tax to the next generation. Great for the cottage, great for the house as well too.
I remember my mom and my uncle. Their names went on my grandmother's house as joint tenancy, so that in case if she did pass away, that it just be reverted to them. But they ended up selling before then, so it was all good. But yeah, like I mean, but they're bringing everything. Look at the gas prices right now. Is this going to affect the summer travel with these gas prices? Because I was talking to Dominica on our team, and she's got a cottage at Shirkston. She said to me, and she rents it out on Airbnb, and she was saying to me, she goes, Rob, I've only got 3 bookings for the summer so far. Like that's pretty bad. Like
we rent out ours on air as well too, and we go up a bunch and rent it a bunch. We kind of do a little bit of the mix. But I think what happened now is that we're renting it out less than what we did 2-3 years ago.
Do you have something at Shirkston?
No, it's near Halliburton Way.
Oh, okay, gotcha. Yeah, so the inquiries are not as they used to be. So
well, and I think there's more people, like a lot of people that we've spoken to. Remember in COVID, everybody wanted to buy a cottage in 2021, and then they're going to have the rental income pay for it. Now they're like, oh, did you want a cottage, or did you buy a cottage rental property? And now I think that conversation's coming up.
Oh, yeah, for sure. Right now, they're probably unloading them. I'm sure there's if you put them up for sale now, you'll probably end up unloading it because there are people looking. But I'm sure the competition's fierce out there. But
no question. I know, and I think too that whole COVID bucket list. I think everybody's getting through the bucket list, right? The cottage, restaurants, travel, and I think you know what, we're going to see the pendulum swing back to homes. I think we're going to see cocooning, and I think you're going to see people doing stuff to their backyards again and making this a vacation spot. They got it all in their system. Now they're going to come back. And I think real estate, look, as you can see, rates didn't change. No. And Q1 has been on fire. I just read an article about Quebec. Quebec is up 12% in unit sales.
Oh, wow.
Already 6 or 7% in value. So, you're this thing about getting back to basics, owning real estate, your home is your domain, and creating this it's everything. It's a restaurant. It's a vacation spot. It's
for sure,
everything. So
sure,
it's coming back. It's going to come back.
I dump a shitload of money in my backyard when I moved into my to my house, because I wanted to make it like my pool. I got the cabana, like the pavilion. Outdoor kitchen. Like my backyard is my cottage, right? Because I'm not a cottage. I'm not a cottage person. I'm not. Yeah. Like, I mean, driving up there all the time is just not my thing. But I did buy an RV in 2000. I kept through COVID. I'm driving on the highway and I see.
Have you ever thought about the Golfi Road Show, Rob? The Golfi Road Show.
So I gotta do. You know what it is? I'm like Conrad, right? Like I'm so entrenched in my business.
Oh yeah.
And for me to go on the road, I mean, I got to make sure I got good Wi-Fi or whatever, a cell service. If I'm doing, like, I can't, like, it's got to be really good. But I park it at Shirkston. I've done an Ottawa trip with it, but I haven't done like a 2-week trip on it. I don't know if I'll ever do it. I don't know. It's too much. Like,
who drives it? Are you the driver?
I drive it. Yeah. Like a fucking. Can you imagine? Look at me driving this freaking RV.
Oh my God.
I can't listen. If I was looking at me, I would not imagine me driving an RV.
No,
not at all.
I can't believe I did it. Like, I actually bought. I went there. Hey kids, I'm gonna look at this RV. The guy says, hey, listen. I was looking at buying a smaller one, and then he shows me this bigger one, and the kids, let's get the big one, So anyway, there you go.
You're awesome.
I got this RV. But you know what? It's got to.
I might rent it off you one time, Rob. Okay, I might
go.
lease
We'll go,
that.
you know,
That's on my bucket list, though.
It'd be good to go like to a NASCAR. I don't know, but I don't even go to that. I don't even go to this. Like, I'm trying to figure out how to use this RV, and like, okay, well, I'll go to Darien Lake maybe with it. You know, it's like, but I don't go too far with it really. I want to do an East Coast trip.
Maybe you can call it the bridge RV. Just you know, if they need some time in between some of the clients, it's the bridge RV. So you can live in the RV for 2 weeks.
Yeah,
and then,
That's not a bad idea.
Well, I park it at Shirkston for 3 months, and they charge me frickin' 15 grand. I don't know, 15,000. They are. I'm telling you, it is expensive. So I'm making a decision, and I only like Jeff uses it more than any of us. Like he takes advantage of it. And but I don't. I just I might use it maybe 2 weekends. That's it. So literally, it cost me 15 grand for 2 weekends at Shirkston. So, but it's expensive. It's expentive.
Oh, it's
so
the gas now too, man.
Oh my God! I just filled up my car my car the other day, and it's got a big tank, and I put premium in there, $2 a liter. Oh my God! Crazy. So the Trudeau government announces Hala mortgages. Here's what they are. So Hala mortgages, everybody thinks that I guess is it Muslim people will not have to pay interest, but they do pay interest. They just roll it in. They are paying way more than what we are. So the banks are saying, "Hey, we got to get in on this action because we're gonna make money off these Muslims. We're gonna make money."
The thing is, it's like you said, it's all baked in. So if you had a $500,000 and let's say the interest is $250, it's just you got to pay $750.
Yeah.
Right.
Yeah.
So it's one time, one hit, you pay it off. There's no interest, but it's the profits already built into the loan.
They got their money up front. They got their.
And the thing is, if you pay it, I think that's.
And then what happens if you move? It's like you paid your interest up front. Like it's not like, hey,
you'll pay it again. That's why I think, like to your point and Conrad's point, I think that's why the banks want to get into it, because if I pay my mortgage off early, I pay less interest. By the sounds of this mortgage, I'm paying all of it, no matter what.
A lot of it was done now, like through their churches, the mosques, right? Through their religious organizations. So they were doing the money, like they were doing the lending, which is really
they were getting richer than the Pope.
Well, you see these Taj Mahal buildings, right? Like, what is going on? Now you get it, right? So so now the banks want a piece of this. You know what? And I've spoken to people about it. They usually try to make it the destination house. Yeah. Right. That's the idea. But you know what? They might build some portability into it. Who knows? I have no idea what the banks will do with this, but it's a very interesting financial product. Really.
Oh, wow. Anyway,
that's what it is, a financial product, really. Yeah, it's the same thing. It's engineered differently.
It's not what people think it is. They're what do you call it? Exempt from interest. It's not that. They actually probably are paying more money. They are paying more money than what the average person is probably paying.
I think you would, just because you wouldn't be able to get to me, how they're going to instate them, it doesn't seem there'd be any benefit to paying it off early, which is typically a benefit of a mortgage. You pay less.
I think that's the business you guys got to get into.
Yeah, I think so. Yeah,
I think you'll make your money fast on just 2 or 3 of those. You don't have to worry about anymore. You're good.
It makes reverse mortgages look like a.
I was just gonna say that's like when reverse mortgages came out. Like reverse mortgages are. Like there used to be just one company, Chip Reverse Bank, that did reverse mortgages. Now I think there's Chip, Equitable. There's about 4 or 5 companies that jumped in on that because they are so profitable.
No kidding. Kurt Browning, I see him on TV all the time. Is it the reverse mortgages? Yes. How old is Kurt Browning anyway?
Obviously old enough for a reverse mortgage now.
55. There you go.
Yeah, I just thought I just found it odd that they picked him to do that commercial. I don't know.
Yeah, I know.
Like, I don't know, maybe like you'd think they'd get a older gray-haired guy or something like that.
Brian Orser wasn't available. So
no, that's it. Anyway, guys, we are running out of time. Thanks again for being on. Everybody that's listening, if you like to follow, share, and like us, and we appreciate it. And if there's anything you want, send us some messages, and we'll see you soon. Thanks, guys.
Thank you. Ciao.
Bye.